Hello students, let's continue with CQR 6. This time we will revise a topic of fund flow statement. So basically, if I start with fund flow analysis, what do we do in fund flow analysis? Try to understand. Here fund means working capital and flow means a change. So what is fund flow analysis? It is the analysis of change in the working capital. Now, for the purpose, what do you mean by working capital? Working capital, as all of us know, is the difference of current assets minus the current liabilities, right? So sometimes they may ask us a question on what is the change in the working capital. They will provide us the details of current assets and current liabilities, or maybe they will give us the balance sheet, with the help of which they will ask us to calculate the change in working capital, or they will ask us to make the statement. So how to do that? For the purpose, you should be clear about what are the different current assets and what are the different current liabilities. So let's now first discuss the list of current assets. So current assets may be these, right? You may pause and note them. And if I talk about the list of current liabilities, then the list of current liabilities will be something like these. Okay? Again, you may pause and note them down. Okay? Let's move ahead. Suppose they have asked us a question of calculating the change in working capital. So let's take a question as a base. Suppose a balance sheet is given to us, providing us details of 2 years, 2014 and 2015, and these are the details provided. Okay, you may pause the video and you may note down the question here carefully. Okay, now if we note the current assets and the current liabilities here, so on the asset side, the current assets are stock, book debts means debtors, and cash in hand. While on the liability side, there is only one current liability appearing there, that is the creditors for goods, right? So with the help of this now, if I want to make the statement of changes in working capital, so how to make that? For that, particulars column, the 2 years data 2014 and 2015, and we will be writing the change. The change may be of increase or decrease. What you have to note here is you're not writing here a change in current asset or a change in current liability. You are writing the change in the working capital. Always remember that current assets have a direct effect on the working capital, while current liabilities have inverse relation with the working capital, right? If current asset increase, working capital will increase, but if current liability increases, working capital will decrease. All right? So in this statement, what we are doing, we are calculating the working capital. So we will be writing the list of current assets and we will be reducing the list of current liabilities. So one by one, current asset stock was given to us. So what was the stock in 2014? It was 240. What was the stock in 2015? It was 370. So the net effect is that current asset increased. If current asset increased, our working capital also increased by 130. Okay. Book debts in 2014 it was 250. In 2015 it was 230. So book debts decreased. If current asset decreases, our working capital will also decrease by rupees how much? 20. Okay. Similarly, if I talk about cash in hand, so in 2014 it was 80, in 2015 it became 60. So as a result, the cash in hand decreased. If cash in hand decreased, our working capital will also decrease by rupees again 20, right? There was only one current liability there, that is creditors for goods. So in 2014 it was 170, in 2015 it became 160. So current liabilities decreased. If current liability decreases, the working capital will increase by rupees 10. Okay, current assets if increase, working capital will increase. Current asset if decrease, working capital will decrease. While current liability if decrease, working capital will increase, and current liability if increase, working capital will decrease. Remember this. All right, now we have noted all the things given in the balance sheet. Now we can take the totals and we can calculate the working capital. All right, the result will be the working capital. So now let's see What is the total of the current assets? The total of the current assets is 240 plus 250 plus 80. If we calculate that, it's 570, right? And current liabilities, no need to take the total, it's simply given. It's 170, right? So current assets minus current liability, working capital will be 400, right? In 2015, current assets is 370 plus 230 plus 60, so that is 660. Current liability is simply 160, so 660 minus 160, the working capital is 500. So we can clearly see that working capital increased by 100. We can also calculate the same by comparing the increase and decrease column of the working capital. Net increase in working capital is of 130 plus 10, that is 140, and net decrease in working capital is of 20 plus 20, that is 40. So working capital increased by 140, working capital decreased by 40, so net effect our working capital increased by 100. So you can write it down simply here. The increase in working capital is of rupees 100. Alright, I hope this was beneficial for all of you. We will stop it for now. We will continue with some other discussion in the next part. Okay.